Bitcoin is at $103,000 right now, and short-term holders are in extreme pain. Over 90% of short-term holders are in loss right now. Historically, when these short-term holders hit these levels of capitulation, we typically see mean reversion bounces, local bottoms, potential relief rallies, right? So looking at the longer time frames, however, like I talked about in the last video, that is still determined by this week, Sunday's weekly close at the MVRV 103K level. In my opinion, that's what will tell us whether or not we're still in a bull market or bear market, right? So if we get weekly closes below the MVRV mean, other analysts like to use the 50-week moving average, but I prefer to use this. So today I want to discuss just how the short-term holder data might suggest that a local bounce could be coming. But I'm also going to try to explain why you shouldn't let these short-term signals cloud the bigger picture. So let's dive into the charts. Before we look at the short-term holder data, I just want to quickly discuss this Sunday's weekly close. Are we above or below the MVRV mean at around 103K? And that's what, in my opinion, would matter more so for this cycle. At least, so if we were tested as resistance and can't reclaim it, that would be strong evidence for the bear market being in and the bull market being over. But in that case, we'd be looking at around a drop to 82K, around the true market mean, if we get a weekly close below 103K. But if we close above 103K and hold it as support on retest, then in my opinion, the bull market still remains intact, like we've seen prior tests of the 50-week, if you're looking at that, or the MVRV mean, which I tend to look at. And so in that case, you would be looking for continuation towards 113K, which is where the short-term holder cost basis remains. And potentially, if we hold above that level, then potential Q4 highs, right? So that's the big picture. Weekly close above 103K, bull or bear. Everything else is noise compared to that, in my opinion. But within that noise, there are some useful signals we can look at, and that's what the short-term holder data sort of gives us. What potentially could happen over the next few days or so. And the time frame you look at, it completely changes your perspective, right? So if you look at Bitcoin on the daily, it looks chaotic, scary. You can get shaken out by every dip, every wick, every red candle, right? Increases your emotion. If you look at it on the weekly, that's much cleaner. The trend is a bit clearer. You can easily see support and resistance levels. They're more obvious and you can actually think clearly. On the monthly time frame, however, that's even better. You can see the exact candles, how many green candles are occurring in any given time frame and how many red candles are occurring in any given time frame. Just an easier sort of way to look at it is if you look at it on a Heiken Ashi candle basis, that's even more clear. So the shorter the time frame, the more noise and the more your directional bias can get sort of swayed by your emotions. Daily charts are useful, but they shouldn't, determine your overall market view, right? And so that's why the weekly close at 103K matters so much. Not the daily, not the hourly, the weekly. So you can get daily closes, wicks below these levels here, but if they hold as support on a weekly time frame, then that's more important in my opinion. And so here's where the short-term holder data sort of comes in. It can help us identify these local bottoms within the bigger trend, not necessarily cycle bottoms, but perhaps local mean reversions. So short-term holders are addresses that are holding Bitcoin for less than 155 days. That's around 5 months. And long-term holders, on the other hand, over 155 days. They're sort of the conviction holders, right? And short-term holders, on the other hand, are more so weak hands, emotional traders, the people who buy high and sell low. The last ones in during FOMO and the first ones out during fear. And that's exactly why they're useful. And when short-term holders are in extreme pain, when they're capitulating, when they're selling, panic selling at a loss, that's historically been a good signal that we're near a local bottom, a place where, price tends to bounce, at least temporarily speaking. And so the first chart I want to look at is the short-term holders in profit. That is currently sitting at around 91% in loss, 8.39% in profit. And so that means over 90% of short-term holders are underwater, which means they bought higher and are now sitting on unrealized losses. And if we look at previous local bottoms, for example, in September 2024, we hit around 0% short-term holders in profit around 2 times, and that's at around 50K, I think it was, and that resulted, in a local bounce up to around 106K, and we saw follow through after breaking above the short-term holder cost basis on a daily basis and a weekly basis at least, and then retesting that level and holding as support, right? Sorry, I was looking at the wrong one. I'm looking at this one right now. And then, obviously we had that secondary bounce in April. We hit 0% again, around 1.25% again. And then we saw continuation above the short-term holder cost basis, and we held this level as support pretty much twice throughout the entire time, and well, more than twice, but we saw, continuation in a new all-time high, right? And last cycle, just to give an example from last cycle, when we hit 0% on the short-term holders in profit, that resulted in the price bottoming, and then we saw continuation after holding support on these key on-chain levels and resulted in a new all-time high. So when short-term holder in profit drops to these lower levels, we historically have seen some sort of relief rally, local bottoms. However, it is important to note that in bear markets, these lower levels can remain for quite some time before any real profitability comes back, where we're constantly hitting these lower levels and never actually reclaiming any key on-chain levels like the short-term holder cost basis or the MVRV mean, which is sort of a good segue to this next chart, which is called the short-term holder MVRV. This shows whether or not short-term holders are in profit or in loss overall. So we're currently underwater, obviously. And when short-term holder MVRV drops below 1, it means short-term holders as a group are sitting on losses, and we are there right now. So typically when the ratio goes to these lower levels, that typically corresponds to Bitcoin downtrending, consolidating. But every single time in bull markets, you tend to get this mean reversion back above 1. Price bounces back towards the short-term holder cost basis here in blue. In bear markets, however, this can act as a sort of resistance. In bull markets, it acts as support. And this is most notably explained by the 2017 cycle, where in the bull market, you'd see, the line at 1 sort of act as a support on the way up. Each time we fell back down to it, we sort of bounced back from that level. On the other hand, in bear markets, this level tends to act as resistance, wherein, all the way on the way down, when you first drop below it, we dropped below it at 15K in the bear market, in the start of the bear market. And then we consolidated and fell below this level each time, and it couldn't break back above it, and all the way down to 3.5K in the cycle bottom. And then we only broke back above this level at around $4,000. And this sort of dynamic plays out again and again each cycle. And so the next metric I want to look at is the short-term holder SOPR, which is measuring whether or not people are actually doing anything with their coins on chain. So all these other metrics look at it from an unrealized perspective, out of the total market capitalization, who is sitting on unrealized profits or losses. So this metric, on the other hand, this is looking at actual coins moving on chain. What price did they first acquire the coins for versus what price their coins left the wallet for? And are these selling at a profit or at a loss on a wallet by wallet basis? And so we are currently below 1. That means short-term holders are realizing losses. They're capitulating. They're starting to sell at a loss, right? And when you see these sustained periods of loss realization from short-term holders in bull markets, you're often near local exhaustion, right? Sellers are getting exhausted. That's when buyers can start to step in if we are to see continuation. So all these metrics are pretty much screaming that short-term holders are in pain. They're underwater. They are capitulating. They are starting to sell at losses. So what does this mean for Bitcoin? Right now, we're sitting at around 103K. And so the short-term holder data suggests that we could potentially see a relief rally, perhaps back to 108, maybe 113, where the short-term holder cost basis is. And that would be your sort of mean reversion play, right? But these are typically, shorter term signals. In my opinion, the big picture is still determined by Sunday's weekly close if we were to see follow through and hold the MVRV mean as weekly support. So if we were to close above 103K, the MVRV mean, then you would likely see short-term holders short-term holder in profit start to bounce and get a weekly close above. That would be a continuous bullish setup, right? So could target 113K, which is the short-term holder cost basis, and then potentially Q4 highs if we start to break durably above the short-term holder cost basis. However, if we break below 103K, that would likely be a, short-term holders might bounce from here, and that would likely be a trap like we saw in 2017, for example, where short-term holders bounced down to these lower levels, and then we got, from around $5,000 all the way up to around $12,000, we saw short-term holders in profit go from 20% all the way up to around 65%, but we never really saw that continuation, right? And so, yes, the short-term holder data suggests that we might be oversold, or at least very close to that point. But that bounce only really matters if we can hold the MVRV mean on weekly closes. Otherwise, it's just, the start of a fake rally, right? So if you're a long-term holder, this might be, a decent accumulation zone. But in my opinion, I don't think you should go all in at these higher levels. I think saving some dry powder just in case we see a drop below to the true market mean at 82K, potentially occurring in my opinion, early 2026 would be my base case. And then the latter half of 2026 would likely result in a bear market bottom sometime a year after this cycle top, whether that was 126K or is yet to occur, obviously. Most people, in my opinion, should be looking at weekly or monthly changes for the overall trend. These shorter term signals overriding the long-term picture is how a lot of people remain on the wrong side of a trade, or just, emotionally trade, right? So to sum it up, some days weekly close above or below 103K. That's my number one priority to look at now. And then short-term holder metrics, are they continuing to capitulate or starting to recover here? If short-term holders in profit starts rising, that would potentially confirm the bounce like we've seen in April and September and in prior bull markets. And then, if 113K starts to become a real possibility, if we bounce from here and then see a pump up to 113K, can we break back above the short-term holder cost basis, which has typically marked, major shifts in the market, whether or not we are to remain bearish or remain or flip back to bullish, right? So if we do see that, then you would want to see a support retest at the short-term holder cost basis, which then would result in continuation again. So thank you guys for watching. All these charts are available for free at chartinspect.com. You can track these metrics in real time. I'm adding constantly more and more charts, more updates every single day. So if you guys are interested in getting updates, you can join our Telegram group. Link is in the description below. Thanks for watching, and I'll see you in the next one. Bye.